Very good afternoon, friends. So we are going to revise the topic of cost of capital. We are going to revise the topic of what? Cost of capital. So what we have to learn in cost of capital? Exam purpose, you will get a standard question, computation of weighted average cost of capital. It can be sometimes on book value method or sometimes on the basis of what? Market. Sometimes they will ask you both the method. Sometimes they will ask you what? Both the method. This is how a standard question will come for a exam. Book value method, market value method. Accordingly, we have to solve it. So if you want to do either book value or market value, first you have to compute weighted average cost of capital. If you want to find out weighted average cost of capital, first you should know how to compute KE, KP, KD, then KR, different perspectives. Correct or not? So this is how you have to go for it. So what is our strategy for the revision is, I'll revise the formula very fast for KP, KD, KR. I hope all of you have your notebook with formulas. So you don't want to copy again the formula, get more time because I will revise very fast. I'll just revise, you can just check it. See, how and all you can find out the KE. We have discussed the different formula for KE. The first formula, if there is first time issuing, if there is a first time issuing, we discuss dividend by net proceeds into 100. Net proceeds is what? Face value plus premium or minus discount minus flotation cost. Flotation cost is the issue cost. Then we discuss if it is in the market, that is constant. Market divided by market price into 100. This is the second formula we have discussed. Sir, which is formula will apply? See, any one only will come. There will come all the situation. Now, next is what? Dividend is growth. See, if growth is given, that is the first preferable model, which is also called Gordon's method. Which is also called what? Gordon's method. Because D1 by FPS plus growth rate. D1 means what? Dividend expected. Some question they directly tell expected. So we have to take what? Directly. Otherwise, what you have to do now? D1 will be D0 into 1 plus. This is very important. If the question already expected or next year is given, that is what D1. Don't want to do again growth rate. Then you can take directly. Otherwise, past dividend, last year dividend, then only you want to go for what? Growth. Are you clear, friends? Now, this formula, sometime 2 mark reverse question will come. How you will come reverse question? MPS. What is the formula from this for MPS, which will also helpful for your dividend chapter? Dividend chapter also. What is the formula? D1 by KE minus TR. Some question, it is a standard essay question. Growth rate may not be given. So if growth rate is not given, how to compute growth rate also we have given. Retention ratio into return on investment. Are you clear? So this role you should be able to recall before we approach the problem. After this, we were discussed if there is no dividend is given, you can't find out the dividend also. Sometimes dividend payout ratio, retention ratio will given, we can find out what dividend. Nothing is given. Then you have another one formula. This is you will approach if there is no dividend at all, you can't find the dividend. Last resort only, which is called EPS by MPS into 100. EPS by MPS into 100. This we have one more formula. You have learned in your ratio analysis, there is a formula called a P ratio, which is called a MPS by EPS. So this ratio formula is also called a, which is called 1 by P ratio. All are KE formula only. All are what? KE formula only. Are you able to recall? So you can open your material and you can able to recall the thing. Sir, I don't brought my material. You can make a photo also if you want it. You can able to got it. But I don't think you will take time for copy because I'm doing it will clear. That is why before starting the session, I told you have to revise this topic very well. Then only start watching the revision session. Unless you revise the topic, it will not be helpful. You have to revise and come for revision session. Next is what? We have to go for the last method, CMA method. RF plus beta of RM minus R. This is how the standard. So the different method we can find out the K. Next we have KR. We discussed that K is, if other thing, everything silent, KR is equal to what? KE. There are two situations it will change. If you find out this method, here your market price sometimes you'll reduce the flotation cost. Market price sometimes you'll reduce the flotation cost. For growth, for the for reserve, you don't incur any flotation cost. So if your KE you found out with this formula, if your KE you found out this formula, you have to recompute. What is the formula? KE will be D1 by MPS plus growth rate. That is flotation cost you should not consider for computing what KR. Then one more situation we discussed there. There is a personal tax rate is given. What is called? Personal shareholder personal tax. In such a case, KR is equal to KE into 1 minus brokerage into 1 minus IT. We take an IT, not company tax. It's a shareholder tax or a personal tax. There are some questions in our material also based on this. Are you clear? So KE we discussed there, KR we discussed there. Next two super point is what? KP and KD. If you go for KP, preference share, we discuss basically two cases. One is redeemable, irredeemable. So irredeemable means just like share, the formula is what is your preference unit divided by net proceeds into 100, or it is preference divided by MPS into 100. If it is a redeemable, then slightly the formula will change, which will come. Can you recall, my dear friend? Yes, it will be. One second. It will be preference dividend plus RV minus NP. If in this case NP or MPS, divided by number of years, whole divided by RV plus NP by 2 into. Yes or no, friends? This is the method we use for if it is a redeemable. If it is a redeemable. In given preference, we told one more situation, that is DDT. What is DDT? Dividend distribution tax. Dividend distribution tax is another cost. So what will happen? Wherever come, we have to do 1 plus DDT. 1 plus DDT. I have already told you have to revise the formula in your notebook, then only it will be easy. After this, we discussed what? KD. KD, the benefit is we have tax shield. So debenture, we have two cases. There are redeemable and irredeemable. If it is a irredeemable, KD is interest into divided by net proceeds into 100. Then if it is a already listed, now you can go interest into 1 minus tax by market price into. Now we have another one concept called a redeemable. So redeemable now it will be the same way, interest into 1 minus tax plus RV minus NP by N, whole divided by RV plus NP by 2 into 100. What is RV? RV is redemption value. RV is what? Redemption value. That is, what is the price when you redeem it? Are you clear or not? NP is what? Net proceeds, face value plus premium or minus discount minus flotation cost. NP, if it is a market price, you have to take what? Market price also. Are you clear, friends? Yes or no? This is how we have to do. Then finally, we discuss the term loan. Cost of term loan. Term loan also we call it as what? KD only. That is the interest rate is already given in the question. So interest into 1 minus tax. Are you clear? So this is the whole the method of computing. Once you compute, you have to find out the weighted average cost. We can do two methods. One is what? Book value. Another one is what? Market value. What is the difference between book value and market value? In book value, you will consider only what? Face value. Here you will consider what? Market price. Your book value is equal to number of shares into face value, whereas market value is equal to number of shares into market price. Are you clear, friends? Then when it comes to book value, you will consider the reserve. Here reserve will, this is the main point under book value or market value. Commutation all will be same. With this logic, you can able to solve any problem of what? Cost of capital. So what I will tell you now, I'll give you by 5 minutes time for you to very rapidly revise your notebook. Then we will do consolidated essay. We'll do consolidated essay only. Before that, just rapidly revise the topic. We'll go for a additional essay model question. Yes or no? Consolidated essay only will do. So that we'll get revision of all the concepts. We'll get revision of, because exam such kind of question only will come. You can't get an easy question. Now, my dear friends, we are going to revise additional questions. So already majority of you did almost all our workbook questions. Workbook question is already available with you. You have already workbook question is available. So if I am repeating that same, we won't get a new testing, new adjustment and all. So we are doing additional questions. Additional question we are taking from CA Inter. Additional question we are taking from CA Inter. See, the more chances. Recent CA exam is done in May 2023. November is there, but May 23. This May 23 question paper, some of the points are coming for December, both CMA and CS. That is the question paper when they preparing, when they want to take additional questions, sometimes they will take from CA also for some topic. So we are doing few selected some from CA, not only May 23, also from previous year question. All are standard questions. Now I have revised all the topic, how to compute KE, KP, KD, everything consolidated standard question. Whether our questions are not good? No, our questions are very good. Then we did already in the class, which is in your book. We want to do some more additional questions. We want to do, so two things will happen. Additional questions practice plus revision also will be there. So two benefit you will get it. So you will get a better advantage. So we are just going to do the question. So which question will start, friends? This is a May 2023 question. With your permission, we'll start. So hope all of you ready, my dear friends. Majority of concept we discussed, everything is covered here. I will read the question for you. Equity shares, face value 10, total value 45 lakh. 15% preference shares of rupees 100 each. Retained earning is there. 13% convertible debentures. Convertible debentures also there. Face value of 100. 11% term loan and total is 200. Additional information. See, this kind of convertible adjustment we were not done in our regular class. It's an additional concept covered in CA Inter. We are going to learn this also. Convertible debenture adjustment. Company issued 13% convertible debentures of 100 each on 1/4/2013 will be maturity after what? 6 years. At the maturity, debentures will have an option to convert into a debenture into equity. This is an additional point. Up to this we have discussed, but converting into equity they are given in the ratio of what? 1/4. That means for every one debenture you get 4 shares. For every one debenture you get what? 4 shares. Right now the market price of the share is what? 25, and the shares are going at a rate of what? 6%. Preference shares redeemable after 8 years. Currently selling at what? 150. Tell my dear friends, preference stock redeemable or irredeemable? Redeemable or irredeemable? Redeemable. They said after 8 years. Convertible debenture also redeemable. That you can able to get. Next day, prevailing default risk free rate of Government of India Treasury bond is what? 6%. That is a clue for what? Very good presence of mind. RF. Market risk premium is what? 8%. RM minus RF. Beta is what? 1.5. This is the clue for what? CAPM. How interesting. You have to go. If CAPM clue is given, the first preferable formula for K is what? CAPM only. Corporate tax rate is what? 25%. Personal income tax rate. Now we revise this. For KR adjustment, personal income tax also given 20%. You are required to calculate. They are not asking weighted average cost. They are asking you have to compute KE, KP, KD, KR, KD. Are you ready? I know you are ready. I am also ready. Let's start, friends. We can do very easily. First, we will do KE under CAPM approach. RF plus beta of RM minus RF. So what is the RF, friends? RF is 6%. Beta is what? 1.5 minus RM minus RF directly given as a risk premium. What is the rate, my dear friends? 8%. So what is the final answer, friends? 1.54 into 8. You will get what? 18.332%. So you got the KE, my dear friends. What is next in preference share capital? Tell, my dear friends, preference share redeemable or irredeemable? Redeemable. So we have to apply our formula. We have to apply our formula. What is the formula, friends? KP is equal to preference dividend plus RV minus NP or market price. Here market price is given. Both you can take, not at all. The number of years divided by RV plus. Either if you take NP also no problem, but NP is not there, they given market. Correct? Now, if we go for this method, what is the preference dividend, friends? The preference dividend, we have to come back here. They said 100 rupee 15%. 100 rupee 50%, it will be what? 50 rupee. Redemption value mentioned or not mentioned? Redemption value mentioned or not mentioned? Not mentioned. Tell, my dear friends, in the regular class we discussed that redemption value not mentioned. We have to assume at par. So your par value is what? 100. So 100 minus market price. Market price they given. Currently selling at what? 150. How many years? Whole divided by 100 plus 150 by 2 into 100. You can take your own time and tell me the answer. What is the answer, friends? You have to do step by step only. You will get 50 minus 50 by 8 divided by 125 into 100. What is the answer, friends? Perfect. Are you clear? Perfect. Are you clear? Yes. Now we'll go for third part. What is the third item, friends? Convertible debenture. Tell, my dear friends, convertible debenture is redeemable or irredeemable? Redeemable or irredeemable? Come on, friends. You have to look into the question. They said very clear, convertible debenture, 140 with a maturity period of what? 6 years. So redeemable or irredeemable? Redeemable only. So we can go for our formula. What is the formula, friends? KD KD is equal to interest into 1 minus tax plus RV minus NP by N whole divided by here NP or market price. Are they given market price? Debentures of 100 each. Market price is NP only. Now there's no separate market price is given NP whole divided by RV plus NP by 2 into 100. My first question to all of you, are we given or not given? Previous question not given, we assumed at par. Here RV is given or not? Here RV, the clue is given, we have to compute. Computation of RV. See what happened on the maturity, it is not, you won't get a cash. You will convert into what? Equity. So what is the value of equity? That is your RV. It's a new model concept. So what is the value? It will be converted into equity 1 for every 4. So what is the value of your equity? That is your RV. Redemption value. Shall I start, friends? So how you will get now? Right now the market price is 20 rupee. So what is the market price after how many years? 25. What is the market price after 6 years? Market price after 6 years. We have to compute. What is the growth rate they given? Here the market price is not 20. It is what? Of market price after 6 years. They given the growth rate. What is the growth rate, friends? Tell my dear friends, if 6 is there, it keep on growing. In your calculator, it is very easy. 25 plus 6% plus 6% plus 6%, you will get the answer. For me, since I am using Excel, it is very easy. I can get like this. What is the answer, friends? What you will get? Come on, friends. In your calculator, always 1.06 into 25 equal to 5 times. What you will get? No, you have to give 5 times now. Are you sure? I will, if you want, this is in your calculator 25. First year 6 percentage. Next year 6 percentage. Next year, see, very important. See, when your debenture is issued, they are testing you 1/4/2023. From here, a maturity period is what? 6 years. So which year you will get matured? 23, 24, 25, 26, 27, 28 to 29. So this 25 is the value of what? 24. So here the 24 is 25, this is 26, 27, 28, 29. So the value it will be what? This, because they given not the market price of 23. For confusion, they given market price of what? 24. So 24 price is already given. So you can able to go not 6 times, you have to go only what? 5 times. Why 5 times? Because now here it is only what? It is already the growth we know. Are you understood the point very well? This is how you have to approach. Clear? So this is just for your reference. I have just given this. You can get directly here. What is the number, my dear friends? 33.46. So this is a very good question. We were not 33.46. This is the market price of share. Tell my dear friends, how many shares you will get for your debenture? Yes, number of shares for one debenture is what? 4. So what is the value of RV? 33.46 into 4. Your expiry, you will get 33.6 into 4. This is the value of RV. So RV, sometime question will be given. This is because of the convertible. On the maturity period, you are not getting the cash directly. You are getting a share. So what is the share value? That will be your RV. That RV we found out with a interesting perspective. Hope you are clear. Hope you are clear. Now you can approach your formula. Now you are expert. What is the convertible value? Face value 100, 13%. So how you will approach, friends? It will be 13 into what is the interest rate? There are two interest rate is there. Which one you will take? Company interest rate. What is the company interest rate, friend? Company interest rate is what? 25%. So 1 minus 0.025 plus RV. RV only we found out now 133.9. NP is already given. How many years? 6 years divided by 133.84 plus 100 by 2 into 100. Can anyone tell me what is the answer, friends? So a very good question. This will you able to understand all the area. You will able to understand what? All the area. So what is the answer, friends? 13 point 13 round 13.15 percentage. Now almost over. Now what is next, friends? Retained earning. Retained earning under your expert KR. Here the situation to apply. What is situation to? There is a personal tax is given. If personal tax is given, KE into 1 minus IT. There is no BR. We have BR is their brokerage. It is not given. So what is your KE? Can you tell me what is the KE? What is the KE we found out? KE is 18.32. Yeah, that we have to adjust. So that is what we are going to do. 18.32. Generally, K is equal to KR, but here there is an adjustment. So 1 minus personal tax you have to take. There is no brokerage. In the formula, you learn brokerage also. Brokerage is not there. I left the brokerage item. So what you will get? 18.32 into 0.8. Your answer will be what? 14 point. Last but not the least, your term loan. Your term loan. Term loan, we know no premium, no discount. So term loan, they will be given in the question itself 11%. The interest into 1 minus tax. What is the tax rate? 0.25. Can anyone tell me what is the amount? So what is the interest rate? 11 minus 1 minus 0.25. What you will get, friends? 8.25 percentage. What you will get, my dear friends? 8.25 percentage. Here, with this question is over. So what happened now? This entire revision of concept we discussed, we got a very good standard question. We got a very good standard question. Now we will do another one question. Computation of book value, market value, everything. So once you completed, we'll proceed. Now, my dear friends, we'll do another again one previous year question from CA Inter. A very good question. Shall we start? Now, my dear friends, we'll go with question number, this additional question. X, Y, Z. These are all additional questions. You can just copy it. X, Y, Z limited as the following book value capital structure. So they're given book value, equity share capital, 11 share preference, return earning, all are in crore. 13%, 13.5 debentures, 15% lump sum. The next year expected dividend is what? 3.68. Dividend per share expect to grow at a 7%. Market price per share is what? 40. Preferred stock redeemable after 10 years. Currently selling at what? 75. Debentures redeemable after 6 years. Selling at what? 80 rupees. Income tax rate is 40%. Compute the weighted average cost of the book value, market value. We know whether it is a book value or a market value. First, you have to do what? KE, KD, KP, everything. Tell my dear friends, first we will go for KE. Which method will approach KE? Can anyone tell me? Which method? Whenever you are growth rate, you have to go for growth model only. So D1 by MPS plus growth rate. Here, what is a D1, friends? D1 is D0 plus growth rate? No, here already expected word given. So it is given 3.6. Growth rate also they mentioned. What is the growth rate? Market price also given, which is 40. So we can just approach K is equal to 3.6 plus 40 plus 0.07. Can anyone tell me the final answer? Very good, 16%. We'll do KR. KR is equal to KE. There is no adjustment of what? Shareholder tax. There is no adjustment of brokerage or no flotation cost. So KR is equal to K. How interesting, friends. Next we will go for KP. KP, redeemable or irredeemable? Redeemable. How you know it is redeemable? Preferred stock after 10 years. So I want you how to try KP and KD yourself. I want you how to try KP and KD yourself. You can just pause the video and try, friends. Term loan I will do for you. What is term loan? Term loan interest into 1 minus tax. Interest is 15%. What is the tax rate? 40. Which will be what? What is 9%? Now I want you how to help me for what? KP and KD. If KP and KD if you did, you can directly go for what? Answer. Come on, friends. You can post the video and try. So what is the formula, my dear friends? We know already. This market price is given, so we can give the MP, correct? So what is the answer? How many of you got the KP, friends? This is the formula. How many of you got KP? 15.43. Congrats. That is what we wanted. This currently selling at 73. So congrats for those who got the correct answer. This is how you have to approach. Are you clear? Next you have to do KT. KD, you tell me your answer. 12.7%. Proud of you, my dear friends. Your answer is correct. So you got all the data. You got KP, you got KD. What is the KP we got, my dear friends? This is 12.7. What is the KP we got? 15.43. Correct? Now you have to go for what? Weighted average. Are you ready, friends? So congrats for those who got the correct answer. Now you can go for weighted average. We want to do the both the method. Which are all the both the method, my dear friends? Book value and market value. Which are all the both the method, friends? Book value and market value. All of you clear? So once you did it, the same question what we did in the previous case, same only, friends. So with your permission, I will go for what? Statement of weighted average cost of capital. So statement of weighted average cost of capital. We have what? Capital structure, amount, weight, after tax cost, weighted average cost of capital. Tell my dear friends, first we will do book value. Book value, nothing to do, just to copy paste. Book value, nothing to do, just to copy paste. So hope all of you done the book value. Let's start. So this is the question for book value. Equity share capital, everything in crore. I will take in crore itself. Equity 15 crore. Next is what? 11% preference. What is the value of 11% preference? 1 crore. Return earnings 20. 13.5 debenture. What is 13.5 debenture? 10. Then 15% loan, term loan. What is the amount, friends? 12. Since I am using Excel, for me it's very easy. Here, now you can take a 3 decimal. That is enough. 3 decimal is enough. What is the after tax cost? 16, 15.42, 16, 12.7. You have to just multiply. That's all. For me, since I'm using Excel, slightly the numbers may change, but your answer will be correct. Final answer you can do 2 decimal 13.93. How many of you got the answer? Congrats. This is how you have to upload. Are you clear, friends? So this is for what? Book value. The same thing we want to do under what? Market value. Similar heading, but small changes will be there. Similar heading, but small changes will be there. Let's see how many of you will able to do this. See, first of all, for after tax cost, best will go for equity. Equity, this 15 is for what is the price? 15 is for 10 rupees, but the market price now is what? 4. So by 10 into 40. I am doing here itself. Because we did lot of questions in our regular class. I'm doing here itself. I'm not giving a separate note for that. So by 10 into 40. You will get an answer called what? 60. What is next, my dear friends? 11% preference. What is the answer for 11% preference? Here, 1 is the price, which is 100. What is the price right now? 75 only. Next, returned earnings. Will you consider or not? In market value, ignore. You won't consider it. Now, 13.5 debenture. The value is 10. Face value 100. What is the selling right now? Now it is only what? 80. Are you able to understand, friends? Next is what? Term loan. We know term loan, it will not change. It will be remain same. Since I am using Excel, for me, just like this. We know the cost will not change. You can take a 3 decimal, that is enough. What is after tax cost? 16, 11% preference, 15.42, 12.7 and 9. You have to do it. That's all. Question is over. So if you done properly, you will get a final answer called what? 14.59. Correct? So congrats for those who got the correct answer. Congrats for those who got the correct answer. So please take your own time and complete. So this is, so we are able to recall all the concept of this chapter. So now 2 questions we are able to make all the concept: book value, market value, computation of each item, everything we are able to recall. Yes or no, friends? Now, what I want you how to do is, I would like to give you one interesting question. You want to read and solve yourself. We did similar question in the class, but here it is little interesting, little number changing and all. Let's see how many of you will able to do. It's a previous year question for CA Inter for 10 mark. Previous year question for CA Inter for 10 mark. You can just try yourself. Just copy, post the video and try yourself, friends. Let's see how many of you got the correct answer. See, they're given the slab for debt. Total amount you want 25 lakh. You have already 5 lakh 25 in the form of what? Equity. So, further details is given below. Combination of debt and equity is what? 2 is to 3. That means your total amount you want what? 25 lakh. In that, they said the word called debt and equity. That means debt is 2 out of 5. Equity is what? 3 out of 5. Correct? Everyone got correct? In that equity, You have already some amount as what? Reserve. What is the amount of reserve? 5,25,000. So new equity shares will be the balance. Capital structure. Are you clear? So new equity shares 9,75,000, reserve 5,25,000. How you get this debt? This 10 lakh you will get a up to 2,50,000. 2,50,000 you will get what? 8%. This is before tax. For computing you have to do after tax. Next day, 2,50,000 to 5 lakh. This is also 2,50,000 slab 2, which is what? 10%. Next slab is beyond 5 lakh. You want total 10 lakh. So beyond will come what? 5 lakh. What is this slab? This slab is 12%. That's all. Now your after tax cost. What is your after tax cost? After tax cost will be your tax rate is what? 30%. So this will be what? 70%. So 5.6, then 7 percentage, 12 into 0.7, 8.4. After tax means into 1 minus tax. Oh, very good. That is percent. See how standard is CA question. See, they said before tax. Third one they directly given what? After. So they can't make any mistake because we making a separate column called what? After tax. That is why we don't have not issue. Correct? Standard question. Then you have to find out KE. KE, what is the formula? They got retention ratio, growth rate, everything. So you have to go for what? You have to go for what? You have to go for D1 by MPS plus growth rate. Your growth is retention ratio, which is 40%. Return on equity, how you will get? Okay, dividend growth rate is already given. Growth rate is already given 15%. So you have to get the dividend per share. What's the dividend? Very good question. Earnings of the company is 50 lakh. How many number of shares? 1 lakh shares. So you will get EPS is what? EPS is 50. Correct. So you have to get your DPS as 50 into retention ratio is 40. Your payout is what? 60%. It will be what? 30. How standard? So D1 will be 30 into 1.15. What you will get? 34.5. So you can go for your K 34.5 by MPS, which is 500 plus 0.15. You will get an answer called what? 21.9 percentage. There is nothing called a shareholder anything. So KR is equal to what? K. KR is equal to what? K. So you can able to get it. Same thing. What you got the same answer only will come here. Here. There it is. You will get a final answer is what? 16.8. Are you going to say? You will get what? 16.8. If you want, I will make you the table also here. Statement of weighted average cost of capital, capital structure, amount. See, here, let me tell you in the question, they were asking one small point, let me tell you, cost of debt we done individually. They don't say average. Average, no, you can do average also. We'll do proper. The amount, weight, after tax, then weighted average. How you will do, friends? If they ask combined, you do combined, but here no combined. Equity. What is the equity amount? 9. What is the reserve? D1. Debt to 1 is what? 2,50,000. This you can do combined also. In the class we discuss how to do combined also. You can do combined also if you want. Next D3. What is D3? 5 lakh. you can take the sum total, friends. You will get an amount called what? 25 lakh. This 25 lakh is given in the question itself. After tax, we found out equity 21.9, debt 5.6712. A very interesting, my dear friends. So congrats for all the friends who did correctly. $16.8. That is. So congrats for you. How many of you got the correct answer? Good. So please complete. Then we'll go for an interesting chapter called another. So this is how you can able to do any question on cost of capital. We discuss different perspectives. So please take your own time. In the regular class, we discuss a lot of additional questions. So please practice all those questions also.